I'm seeing a lot of positives. I'm seeing companies genuinely interested in how they can support their clients, their insureds, in the transition towards carbon neutral, etc., or a more sustainable business. And insurance products, obviously, insurance does perform a key role in helping to take some of the risk out of companies transitioning. So transition is a risky business. You're moving from one known set of affairs to a slightly less well-known set of affairs, and that journey can be a bumpy one. If you're in a business that's heavily reliable on carbon, for example, moving towards a lower carbon future is a tricky one. It's not easy, and it won't be done overnight, and there will be mistakes made, and there will be potentially short-term problems. So insurance provides an awful lot of, it can provide a safety net for people making those brave decisions. And the D&O policy obviously is a key one because it's the boards that are making these decisions to transition and how the transition is made. And they're going to get flack from shareholders from either side. Like I mentioned earlier, they may get flack from various quarters in the shareholder group. Plus, they could have regulators breathing down their necks. There's a lot more regulation coming in regarding ESG. I mean, climate change has already produced quite a lot of new regulation here in the UK, and the FCA and the PRA are currently consulting on the sort of social governance side, particularly the social side, in terms of making sure that diversity and inclusion is on board agendas and not just the tick box. So that's coming in as well. But these journeys for directors are going to be bumpy. And you may, for example, in the Netherlands, Shell has had difficulties because not a shareholder group, but a campaigning group has obtained a court order saying that Shell's carbon neutral plans are not aggressive enough, not ambitious enough, and they should be more ambitious. And that decision's under appeal. But you could see how that's going to be a severe headache for directors if it's possible for people to bring those types of claim. And essentially, the directors have got to change direction. They've got to change the strategy of the company. All of the assumptions that they made when they brought out their goals, their transition goals, have to be rewritten. And that's going to be a risky time. So insurance, I think, is going to be a key protection for companies, for directors, and obviously indemnification. They're there to make decisions based on all the information, and if they make those decisions in good faith, if those decisions turn out to be wrong, then the company should be indemnifying them as long as they haven't acted recklessly or grossly negligently or dishonestly. And if the indemnity isn't there, perhaps because the company's gone insolvent, then the insurance should be picking up the strain. So I think that the D&O product is developed. It's very broad, and it went through a crisis when the book was being written. It was really in crisis. The D&O market became very, very hard indeed, which meant that the premiums were increasing exponentially. I mean, doubling, tripling, maybe even worse, multiples of 10. And the amount of cover available was going down. So whereas a company might be able to buy 100 million of cover, $100 million of cover, it was only being able to secure $30 million of cover. Those were very real problems at the time. And it was caused by a lot of claims coming to settlement, which is when insurers tend to have to pay all the money out, coupled with a sort of a shrinking of capacity being available from investors for insurance. That's thankfully moved on from there, and actually the market's bounced back dramatically and is now incredibly soft again. So it's now a very good time to buy more cover, and the products are very broad. It's a good time to buy D&O, and the product will cover the types of thing that I've been talking about. On the negative side, I haven't really seen anyone try to credibly add a climate change exclusion onto their D&O policy. I haven't seen it, and I would not expect to see it. I think that would be a backward step. Directors and officers insurance is an all risks cover. It doesn't matter what the reason for a claim is. It doesn't matter what the underlying cause of the claim is. As long as the directors are sued or prosecuted or pursued by a regulator, then they should be covered. Unless they've acted dishonestly, but that's only once they're proven to have acted dishonestly and not before. So I would be surprised to see a climate change exclusion. I think what you may see, there is an environmental exclusion that goes on some policies for some types of insured. You may see those exclusions interpreted in a certain way to try to remove cover for climate change related litigation, but I think it'll be difficult. And I don't think courts will be terribly sympathetic of those exclusions. It's a difficult job the directors have got to do, and it doesn't seem fair to exclude that category of claims, particularly if it's a potentially fertile and risky area for the directors to be sued in. So I think so far I haven't seen any negative side to the climate change discussion. I've only seen positive new products as well. Products that support individuals in relation to all manner of types of things that can happen to them in relation to climate change. And I think that's a very positive step. And there are examples of big insurance companies investing in sustainable energy projects. That the insurance community obviously is a big investment community, as well as providing cover for companies. They're also investing large amounts of money. And there's some really positive signs that insurance companies are putting their money into certainly environmentally sound endeavors. And I think that's a very positive step.